Good morning, everybody. Welcome to the Flow Show, Thursday, 23rd of January. We're carving through the month already. 7 days and the month is done. It's going to be another fast year. Hope you're all doing bright and breezy. I'm going to perhaps have my mortarboard on this morning, do a bit of teaching, looking at some of the markets. There's some trade setups, strategies that might become valid for some of the price moves we're seeing. So I'll get into that a little bit later. Let's get on with the show and what's been going on. Not a lot going on in Asia. China fixing 717s, so keeping it the level pretty steady. Norges, nothing unexpected from those guys, held rates at 4.5% as expected and repeated that the policy rate will likely be reduced in March. That's been their line for a couple of months now, so no change there. Goldies are expecting the BOE to cut rates 6 times by next year on the back of the economy slumping. So if we're looking at the rough market line at the moment is 100 basis points of cut, so call that 4 cuts. They're going for 6, so that's potentially 150 pips of cuts by the BOE, according to the wise folks at Goldies. I wouldn't rule it out, but they're going against market consensus at the moment. Bundesbank with some cheery news, cheery thoughts for the start of the year, saying Germany is still struggling to exit stagnation. A meaningful recovery in the economy is unlikely at the moment, and inflation is likely to remain elevated at the start of the year. Nothing like a bit of uplifting chatter from those guys. ECB's Ren, another one who's getting into the victory laps, says we are now confident that inflation will stabilise at its target as predicted. I'm going to save that one on a post-it note for 6 months' time when they're cutting by 50 basis points and talking about negative rates. Hawke Holtzman, he was in line with all the recent easing from the ECB, but he's turned back to his hawkish self over his last few comments. Says would be better to wait a bit longer on a rate cut, saying there is a danger of cutting rates now and then having to hike them again later. So he's stretching his hawkish wings. Pretty much zero data out anywhere, so not a lot to talk about. MBA data, housing data, we saw a big jump last week, 33.3%. That's pretty standard coming into the first week of the new year. Housing activity tends to obviously die off in the weeks before Christmas, and then we get a bounce back in the early part of the year. So that was at 33% jump there. Now back down to a more normal 0.1%. The 30-year mortgage rate still tracking pretty high above 7%, or keeping above 7% for now. That's reflective of the mood for the Fed at the moment. Canada PPI data, a little bit mixed. This stuff can be pretty volatile, especially on the year-on-year numbers. So we've had a decent jump, 4.1% on PPI. Raw materials up 9.1%, but as I say, those numbers can be far more volatile than a lot of PPI numbers that we see. Otherwise, month on month, there was a decent uplift in raw materials and in PPI, not as high as expected, but still a rise anyway. These are December numbers. Probably hasn't got much say in what the Bank of Canada are going to do. Right, straight into politics, I'm afraid. Mr. Musk has already taken a few pot shots at Mr. Trump's new AI infrastructure spending thing, Stargate, saying that some of the companies involved do not necessarily have the funds to come up to this 500 billion that has been proposed as an investment. The likes of SoftBank coming up short in terms of how much they're going to be able to put in. But so we've taken a few pot shots at that. Mexican President Sheinbaum says a Mexico-EU trade deal is in an advanced stage, but is not done. I wonder if that's going to be put on hold until they get their stuff sorted with the US. Mr. Trump has turned his attention to Russia, saying that if there is no Ukraine resolution soon, the US will put high levels of taxes, tariffs, and sanctions on anything being sold by Russia to the US. He says tariffs, taxes, tariffs, and sanctions will also target anything being sold by Russia to various other participating countries. There's still no concrete comments about having a conversation with Putin. It's all we could, we're looking to type stuff. We've had a bit of a response from the Kremlin this morning, saying that they, regarding a Putin-Trump conversation, we remain ready for equal and mutually respectful dialogue. So the door is open for them to have a chat, talking about Trump's threats, saying this is really nothing new in terms of the sanction threat from Trump. So they've brushed that off under the carpet. Argentina's President Milei say he's willing to leave the Mercosur if needed for a US trade deal. The Mercosur is pretty much a South American trading bloc. So he's potentially going to say he's going to leave that to get a decent US trade deal. He says also, though, the idea is to deepen China-Argentina trade ties, which might not go down too well in terms of a US trade deal. It also says that Argentina will lift controls faster if it has funding. Now, Argentina was a bit of an outlier theme I took in my 2025 blog post that me and the team put out, because I'm watching what's going on over there. It's not very easy to trade anything over there, given they're pretty closed off to markets. But I think that's going to be an interesting watch this year to see if this guy can actually really, rip up the rule books in terms of how you run your economy, and get Argentina back on the map. And for now, he seems to be doing all the right things. But I think Argentina could be a good watch this year in terms of they might come bouncing back into the world economy. And that's about it. Look at that, all done. Nearly 8 minutes, and we're all done with the headlines. It's been a bit quiet thus far, and it's going to be even quieter because now all the ECB bods are on blackout, joining their Fed members and all the others. So nice and quiet for a good week. Not hearing from those guys. I love it this time of year. It's peaceful, calm, and tranquil when that happens. So that's really it on the headline front. There's a few other bits and pieces. Bloomberg have noted that there may be some pressure coming on the yen, so a weaker yen, because Japanese investors are putting tons of money into foreign stocks as part of the new NISA savings program that got expanded last year. That's causing more inflows of money and allocations and where they can put that money. And so various analysts are tying that together with the possibility of a weaker yen, as obviously people sell their yen and buy dollars and other currencies to buy those respective stocks. So that's something to keep an eye on. But yeah, I don't think it's anything we can actually trade upon. But that's one other headline going around. So all pretty quiet at the moment. Right, so let's have a quick look. I haven't even looked to see what's coming up today. Apart from jobless claims, that's it. Oh, Eurozone consumer confidence. Oh, that'd be a throbber, I can tell you that. So not a lot going on. We do have a tips auction later on to keep an eye on. I'll be around for it, so we'll keep an eye on that. And then coming into tomorrow, we kick off with obviously the BOJ meeting, but we get the first PMIs of the new month coming through, starting down under in Australia. Keep an eye on that CPI data as well. It comes after the Tokyo numbers, which is the first hint of the new reporting month, but we get the national numbers just ahead of the BOJ. So as long as there's no big surprises in there, it shouldn't change anything for those guys. And everyone is expecting them to hike. We've had stronger rhetoric from the sources pieces that they're going to hike tomorrow than we did in December, but there is still risks to that. It's not a done deal, and it's not over till the fat lady sings. So if it's a 25 pip hike, as the market expects, then I'm not seeing too much problems for the yen at the moment. I was looking for the potential for seeing a bit of a knee-jerk confirmation move lower in dollar yen, but the way it's holding up at the moment, it's showing really no signs that we've even got a BOJ meeting happening. So I'm not sure we're going to get much of a reaction if they confirm the hike, unless there is a real change to their messaging and it's far more hawkish than previous. My base case is that if they hike and if they go 25, that will kick them through, allow them to sit back and get the next spring wage numbers in, see how those are going, and then who knows, we're probably looking middle of the year potentially for the next time they may look to hike if the data keeps performing as it is. Obviously there are still risks that they don't go at 25, they go at 15 BPs or something like that, or 20. That's a little risk that you need to be aware of. That might be seen as less hawkish. But from where I'm sitting right now, knowing everything we do, I would not be surprised if dollar yen is higher when I wake up tomorrow morning. But I won't be awake to see it. So it will do what it will do. So keep an eye on it if you're going to be up for that one. You know your key levels, 157 up top, 155 down below. And that's your marker for the BOJ, obviously depending on what happens today. Yes, we do have Mr. Trump speaking. That's again later in the evening for us, 11 a.m. for you guys over there, which is 4 o'clock-ish. Oh, I might still be around if he decides to turn up on time. He hasn't got a good record in that, but we'll see what he's going to waffle. That's an interview. As opposed to some of his other appearances that he's brought out. Right, so that's dollar yen taken care of. Right, so let's look at what's going on. And this is where I want to get into a bit of teaching, okay? Because the price action we've seen thus far, okay, it's keeping to trends. It's keeping to what it's been doing previously. Euro dollar is the case in point. Every time we've had breaks in support since 112, we found it as resistance straight after. Support, break, resistance, support, break, resistance, support, break, resistance, resistance. You get the picture. All the way down, we've stepped down this pattern. Most recently, obviously, the 106 area. And then we did it at the 105 area. Then we did it at the 104.50 area. Then we started doing it at the 103.30 area, 30.40s. So we've had this pattern all the way down. Now we've had a potential bottom. We've crept back up some of these levels. This 40-60 zone is now support at the bottom. We'll see if it becomes support at the top. But we've got up to the first meaty resistance area, and thus far we failed. Okay, so while we were doing this move, everyone, or a lot of people, been calling for the death of the dollar. Well, it wasn't yesterday. Okay, the dollar isn't ready to roll over just yet. So the first time we hit a decent area, and we've done it before, we've come close, we've hit it, we've tried it several times, we still can't get through. Okay, so this is still a very weak bounce given this whole trend. Okay, we've only just got to the 38.2 of the December leg. 38.2 of the move from 112 is still way up at 106s. Okay, so oh no, I haven't even got the fib on that one. That's the old fib. I'll need to put the fib on that one. But yeah, 38.2 is probably up there somewhere, give or take. So how can you trade this? All right, if you wanted to be a buyer of the euro and you're not seeing it get through there, well, what you're going to do, okay? You either need to take some profit and look to reload on the dips, because we still may be breaking higher. I'm not saying we're not going higher and we're going all the way back down, but at the moment, if we can't get through there, there's no point thinking we go into there. Okay, so what happens with these types of levels? When you get levels that hold over a decent amount of time, and this is still pretty short term, I mean, we're talking from mid-deck through to mid-January now, we're holding it. That's getting on for a decent amount of time, a bit like how we, had a couple of goes through, but then we held it for quite a while. When you get situations like this, okay, if you want to be long and you're not long already, you either wait for a dip to somewhere like this area, or you look to trade a break, okay? Because the more times you test a level, if it eventually goes, the more volatile it's likely to be. Now, the problem with this pair is that you run into another big level 30, 40 pips above. Okay, so trying to break trade on this one, then you're looking at it more of a bit of a scalp. Get 20, 30 pips on the table, you need to be taking some profit, because your next risk level is the 105 area. Okay, and it's a bit of a wide zone. Okay, bit of a traffic zone. Or you go and look for something a bit cleaner. Now, I was pointing out the Aussie dollar. This looks a bit more cleaner, because you've got a bit of room on a break trade before you start getting into the next potential traffic zone. Okay, it's not an awful lot, but it's 50, 60 pips, maybe 70 pips you can grab out of that before you start hitting the traffic zone. So it's a bit about risk reward. Okay, euro dollar, it could be a low risk reward trading a break. Aussie dollar, looks better on the risk reward basis. Okay, because you've got a bit of room for it to move compared to the others. Cable, that's another pretty tight one. We hit that 38.2 fib. Wallop, couldn't get through it. But if we break here, we know we've got a bit of traffic when you get up to 124.50 and towards 125s. So you've got a bit of room. It's come up, 370 pips, decent move. That's a good pips for anyone, but it just gets a bit tighter when you get up to some of these levels. But you've probably got a bit more room to try stuff here than you have in euro dollar. The other one I'm looking at the moment, so I'm still looking at potential for a break trade in Aussie dollar. The other one I'm looking at is the S&P. Now, I've had this order in place since before the turn of the year. Speaking about it here, speaking about it on Face everywhere. Okay, we've hit this high again. We actually made a new high yesterday, just by a few decimal points, 70, 80 decimal points. Okay, but it's held. So we've now got a high that's been in play since December, so over a month, and it's looking really solid. It's a nice clean level. We're not getting, the little pokes up through 10, 15 pips and then dropping back. It's nice and clean and solid. That's what I like to see when I want to look to trade a break trade. Because the more times we do this and hit this and pull back and come back and, test and test and test, the more times we do that, the more the pressure is building for when you do get a break, because people are coming in and selling it. So if anything, the stops are getting bigger. Every time people sell from here and they stick their stops on that trade there, then they head back and stops get bigger, and they head back and the stops get bigger, and they sell here again and the stops get bigger. Now, that's not to say they haven't been offloading in the dips, so their positions are smaller, but my experience is that the more times you test it, the bigger the stops start building behind it. So when you get a move, when you do get a break, that's the one you go for. I'm just going to see if I did have some graphics on it. Let me call up this chart a second. I don't know why the lines aren't on there. Give me 2 seconds, if you will. I posted this chart this morning. Where are we? All right, I don't know why it's disappeared, why the market has disappeared. So this is what we're facing at the moment. Okay, we've had these patterns going back the last 12-18 months. Okay, where you get these highs, respected, and then when you get the breaks, you get a decent move again here, respected, and then when it does decide to go, this one was a little bit flakier, but when it went. Same with this one, highs, and it's all across a good couple of months. So you've got good time lapse between how many times and when it starts or when it tries to have a go, and then off we go. So this is where you get your big rewards. Now, for those who've been around a while, know I did this when we were down at 4,800. Okay, that was a big break when we were down at 4,800. This is on the scale of more short term that we're seeing at the moment. Okay, so I'm looking for a break trade. I've had some buy stops in. I'm going to keep those buy stops in. I may even increase the size of those buy stops, just given what I'm seeing for the price action. Now, there's never a guarantee. Okay, there's no guarantee that it doesn't just go through 10, 20 pips, trigger the stops, makes a new high, and then comes down again. Okay, but these patterns, when they do work, this is what gives you your decent money, because you get these decent moves and they don't look back, or very rarely look back. Okay, now this one here, maybe if I'd have tried that one, I would have got in a few pips and then it broke back under, I might have got stopped out. They are pretty low risk, okay, because you don't have to buy 10 pips below the zone and in anticipation of it, and then you get suckered with a loss. You don't have to do anything until it breaks. And you don't even have to take the initial break. You could wait for this, where it breaks, and then boom, you hold it as support. And then off it goes. Okay, this one might not have worked out. You know, I'll be honest about that. If I had my stop, 30 pips under my entry, I might have got stopped on that one before it then went off. Well, that shit happens. That's the way trading goes. Okay, but the times it does work, you get your decent moves. Okay, so we've got a lot of pairs, a lot of assets doing the same sort of thing, particularly in these dollar pairs. You can look at Kiwi dollar. Not quite the same strength, perhaps, in this, but we've got, definitive level up towards his 56, 85, 90. Okay, a bit of room up to the next level. The main traffic zone is up here, 58. So you've got a bit of room if you do get a break. Okay, or else if you don't want to trade the break, then you look to buy the dip if you want to be long, or you short against the resistance while it still holds, and then maybe you can buy it back down here and trade both ways, because at some point either side's going to break. It's guaranteed. At some point one side or the other will break, and when it breaks it's going to go. Okay, because you've never seen Kiwi dollar sit in a 100 pip range for long. Okay, it might sit in there for a few weeks, maybe a couple of months, but it's going to go eventually. So you can trade between the lines or wait for the breaks. At the moment, I'm eyeing up some breaks in a lot of these trades. So that's a lesson on that, on break trading. Okay, but look at the evidence. You want a good amount of time between a level that's developed. The longer the better, because the longer that level's been in play, the more bang for your buck you're going to get if it does break. Okay, so it's all about scale. Something like this, if you're trading this one, I'll be starting to take profit 20 pips in the green if I start seeing it, and getting my stops up and reducing the risk behind it, and then maybe cutting at some of these smaller levels, cutting and chopping and slicing and dicing, as you guys and girls know. But on something like the S&P trade, I might take a little bit of profit on, maybe just to get the trade to or my risk to zero. But then I want to sit in that, because that sort of break could be 300-400 pips on top. So I won't be in a rush if that trade works to do the slice and dice for that one, get out too quickly. And then you can just sit in it as long as it goes and see where it wants to go. Okay, so there's several ways of trading. You don't have to just do the opposite of a price move when it gets to a level. You can wait for the breaks and trade the breaks. Okay, break trading is a big part of my trading. and it should be a strategy that you guys and girls should look at as well. Right, so that's a little bit of a lesson. We'll have a bit of a look at some of the other price moves. Gold had a little bit of a wobble earlier. Might have been that Putin headline that they're ready to talk and engage in discussions. Might have just taken a bit of risk off. Though our mate Bubbles in the room pointing out that we saw a similar move yesterday, slightly different time, just a quick 10-15 buck drop there. But we bounced from this minor area, 2740s, and so we haven't started to reverse this move just yet. We still might go on and take out that high and then head towards 28s. So it's looking like a bit of a minor pullback at the moment. I think under 2730 and these highs here, and then potentially the picture's changing for that one. Let me know if you want me to look at anything, boys and girls. I am having a look at dollar Swiss as well, just seeing what that's up to. If I can find it, where are we? There we go. Because this one's still in its whatever you want to call it, it's W pattern, wave pattern, whatever you want to call it. It's, you know, quite a clear range trade at the moment for this one. We couldn't quite get up in the early part of this year to test that 50 up at that 92.40s area. Decent looking double top. Can you call it a triple top? I probably want to see at least a test up near these highs before I call it triple top, but it could well be a triple top. So for now, you know, we've got this decent range going on. Again, at some point this range will break, but you know, this is something that lasts a good long while. Again, this falls into the break trade category as well. Okay, these highs have lasted since September 2023, so they're over a year old in the making. Okay, so if you do get a break here, then you're probably looking up towards a 61.8 at the least, if not up towards 96s. So again, risk reward wise, decent value, and we are still in this uptrend. Okay, so this uptrend hasn't broken down like it has at these points. So if you want to try along for a potential break, then this 38.2 down to the 90 is potentially where you want to go. You might have already missed it if you haven't already, but this is your level. This is your support point. If we hold here on a test, then we've got every chance of going on to at least take out that high and maybe even that high. Okay, so if you get long here, you want to be taking a little bit of profit, some profit up here in case it fails again, but you can also keep a little bit on the table, move your stops up in case it does break, and then you can always add, and you know, maybe, as I say, we're heading to 95s, 96s or whatever. But for now, there's some decent levels to keep an eye on in that one. Pound CAD, Derej, you do like your pound CAD, mate. So what have we done on this one? Well, we've had a little mooch under the 38.2 just to this leg here, down below the trend line. So the trend line's looking a little bit washed out, although we've seen a bit of action underneath it. So it's still potentially a bit of a level, although it has washed out a bit. So if we get another test down here and it holds, that will tell me that we can keep the line in there. Otherwise, we had a little knock through, got through these lows as well. So it was looking a bit iffy, but we're back above and already holding that line again straight after. So this is still your important support point. Whether it's got the legs to get all the way back up here is another question. You're going to need to see a bit of a turnaround in sentiment, particularly on the UK side of things, let alone the Canadian side of things. And that might be coming. Okay, we've got, as I've been mentioning, the government, UK government, now scratching around for ways to increase growth. Even Mr. Two-Tier Keir this morning banging on about how he's going to rip up regulations that are holding back infrastructure and the like. All big words. they've got to be put into practice. And thus far, everything he said, he hasn't delivered on. So we've got Rachel Reeves still heading towards a speech where she's going to have some growth policies. So that is your near-term risk point for the pound in terms of government response. If the market likes what they're selling, then you're going to see the pound turn around a little bit. But pick your poison. We're doing different things in cable than we are doing in euro sterling. So you've got to pick your pounds. Okay, this is still showing pound weakness more so than cable is. Cable's pretty much all about the dollar. This one is more about the pound. That's why we're up here. We're not up here because the euro is suddenly great and everyone loves it. We're up here because everyone's hating the pound. So if you're selling the pound, this is going up. Okay, so again, I'm eyeing this zone, this 85 zone for potential short, because if we do get that turnaround from the pound, then this is technically the level to lean on anyway. But if the market does take what the government's offering and likes it, then we're probably going to see this one heading back lower. Don't know if we get all the way down here again, but that would be what I would look to. I would be pushing for that in a trade if I manage to get in some shorts. I'll have to wait and see. Might have to go to market if I don't get a test of this one, depending on when that speech is going to be coming. So there's a few setups in play that I'm looking at anyway. Or Michael, you're along from the bottom still. Good stuff, Derej. Michael, you bounce around on time frames with your analysis, sometimes 4 hour, 1 hour daily. Yeah, you've got to have a good overview of your charts, okay? Irrespective of how you trade. If you're a short-term trader, okay, you're a scalper, you're an intraday trader, you're a part-time trader, you know, you try and make your trades when you've got a few hours to kill, you're probably looking at short-term charts, okay? But you've got to look at the bigger picture, okay? Now, some stuff, Michael, you know, I'm looking at a daily chart from this because I want to show, obviously, this level up here and why I'm looking at it, because you can't really see that clearly on a 1 hour chart. It just, you think, well, where's that from? Okay, so when I'm doing this, when I'm doing analysis, I flip between the time frames more so you can see the clearer picture of what I'm talking about. Okay, but when I'm trading, my lifeblood is a 15-minute chart, you know, going to something like euro dollar. This is what I watch intraday, okay, because it tells me exactly where the levels are, what's happening intraday. You know, today 103.90s is our support point. Okay, it's been a little bit of a support point previously. Okay, it's not something I need to put a line in, but intraday I can see what we're looking at. At the moment, 104.20s is intraday high, or this morning's high. Okay, so that just tells me, right, if we're going to do something, we need to move out of that range. But for the bigger picture, you know, again, I've got this level here, 104.50. Why is that a level? Because we've had this price action here. Okay, that's why it developed. But I go through the time frames because you have to build up an overall picture. You know, you could look at this and say, well, this is bullish because we've had a decent bounce off there. But look at it on a longer term chart, and how bullish does that look when you're looking at that? And also you need to look for confluence of your tech levels, okay? Like your moving averages. I tend not to trust moving averages anything under probably the 4 hour. So I'm looking at 4 hours and dailies, okay? And I want to see what's coming in. What confluence have I got? Why might this zone here be strong? Well, it's got prior price action, but we've got the 55 DMA sitting there too. So that's just another bit of tech in the mix. Let's have a look on the weekly, see if that's showing anything. Nothing there. Monthly, nothing there. Everything's miles away. Okay, so I go through all my time frames to see what else is there. What other levels is there? Am I just looking at short-term levels, or am I looking at something that's more long-term? Okay, like the 105. Let me just put it on a cleaner chart if I've got it in there. No, so let me just move that up. Well, anyway, the 104.50. Why did I have that line in there? Because it was a previous low. some time ago, and we've had plenty of action across there historically. But let me just move that up to 105 if I can get it. There we go, close enough. Why has the 105 been a big level? Because it goes back and back and back. So you need to look at your wider pictures. Okay, it's not just for trading short term, but you can see what tech, why is that 105 level a solid level? It's a solid level long term, and you've also seen it show up on the short term. Okay, when we came down, hold, break, gets a bit messy, hold. Okay, because these are the levels that give you your decent trades if they work. Okay, I traded some of these bounces here. I think I traded the first one up towards 106. Okay, so it's really just about mixing up your intraday view and making sure you don't miss some of the longer, bigger levels that confluence with some of your shorter term levels. Right, that's been a good one. Anything else before we move on? What's happening in dollar CAD? Still sticking to the range. Decent hold there here into 143. Again, bit of a short-term level, goes back to December. It's had its breaks, had its moves under when we've had some volatile news, but when we've come to a stretch point and there's no bigger news, we've had a little bit of a hold here. So this is becoming a bit of a zone, 142.65, 143s. Now this, just to echo that point again, Michael, 143s is just a bit of a short-term area. 142.60 is there because of that and some areas traffic through there. Okay, that's why it's on the chart. Again, that's why you need to have your longer term look, because that level goes all the way back to 2020. Okay, that's why it was on there. Didn't do much on the way up, but we had a little bit of action going into it. We had a test and a failure. Didn't dip too far, had a break, hold of support. So that, again, that's another example why you need to have your wider picture, just because some of these levels are a bit stronger than others. But for now, we're back in the middle. Again, this is potentially building. We're not going to stay in this range too long, even though we've been in it just over a month. You know, it's probably the longest period we've seen. I'm skipping out the time frames again. It's probably the longest period of consolidation we've seen for quite some while, going back to this period. Okay, the mid to early part of last year. Okay, so doesn't stay that way forever. We're going to get a break one side or the other at some point. So again, it sets up the possibility for a break trade. Okay, if you're not short against the resistance, you don't want to do anything in the middle, then you wait for a break below here. Because then if we're breaking below there, we're probably going back down to low 141s, at least the low 142s, maybe even more. Same on the top side. We get a proper break up here that holds. We're going to be potentially heading towards a massive double top near 147s. Okay, so that's a good 300 pips potential if you get it right. Right, if that's all, well, maybe we'll call that a day. Oh, you guys have been a bit quiet today. Rand looking at a bit of dollar Swiss as well. Ekisola, there's your dollar CAD for you. That's it. All right, we'll call that a day for today then. Not a lot else to talk about. So have a great day. Don't forget to catch up with us on Face later. And yeah, we'll see what comes from today. It's going to be headline driven, I think. So take care of your trading. See you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.